I grew up in Virginia and went to University of Virginia and did systems engineering, and decided I wanted to go on the business side, and had an opportunity to go into consulting for 2 years before business school down in Houston. So it, of course, ended up being energy. I liked it, and I came to Houston in '82, which was about the peak, and I saw the oil prices start to fall there through '84. Went to business school, and then because the people I'd met in Houston had the opportunity to join a boutique investment bank based in Houston that only did energy, oilfield services, and my second year of business school, prices went from $25 to $10 over a course of about 6 months. And I thought, perfect time. It can't get any worse. And it was a great time to learn. And we worked with a lot of companies in distress. We worked on a lot of consolidating companies, helping, taking 2 companies that were really bankrupt and putting them together, and then creating one that would survive and succeed. And I think it's important, or I like to specialize, so I like being focused so that you learn a lot about one industry, and particularly in energy, that's important. And it's Houston and Texas and the whole energy industry is just a great industry. It has it's very risky from its early years of wildcatting, and so relationships and trust are very important. And so your reputation is important, and it's okay to fail. And you're expected, things don't always work. It used to be you drill 10 wells and you would expect 1 or 2 of them to be good. Now, those numbers have changed these days with unconventional, but that is there's just a very strong acceptance of you go out there, you try, you do your best. If it doesn't work, you just get up and you try it again. So we did a number of investments in 7 companies, and those did well. And then a few years later, we went out to raise our first institutional fund. And so we closed that last December, and we raised about $270 million, which is small for a midstream-focused energy private equity fund, but it's perfect size for what we do, which is we focus on niche opportunities. So we look to invest $10 to $50 million of equity in any one company, and it's to provide growth capital. So it could be either a development project like a pipeline or a gas processing plant, or it could be investing in an operating company so that they could grow geographically, or they could build more assets like pipelines. We've even done landfill gas to energy projects. So really focused on energy infrastructure around transportation, storage, and then processing of oil or natural gas or refined products. Once we found a placement agent who had energy industry experience, liked our size of fund, had a lot of contacts, could open all the doors. They helped us to redo our presentation materials, how to tell our story in an hour or less, and then they got us on the road, and we were 4 to 5 meetings a day, every day for 2.5 months, until I finally raised my hand and said, I can't do this anymore. So then it was only 3 days a week, but we got closed within 6 months. And so it was a very, it ended up being much less painful than I had anticipated, but that's because we had a lot of help in the background setting up everything. For EIV, we had basically exited all of our first, almost all of our first investments. And so we don't have the problem children that we have to deal with. We have, and we were just starting to invest our capital. So we're actually in a good place relatively to have lots of dry powder. And really the thing is to be careful about when is the right time, because I think we'll still see a lot of pain the next couple of quarters. And then you have to just let things shake out so that the sellers or the companies looking to raise capital, their expectations are realigned with what reality is. The way we invest, because we're in the midstream, we typically try to invest in companies or in projects that have long-term contracts that help take out the commodity price risk. We've looked, particularly 4 or 5 years ago, at some wind investments, and I've invested in wind before and earlier in my career. We looked at some solar. The returns are not there to meet our hurdles. There's a lot of capital that's interested in that space. So, I mean, obviously we're moving. Fossil fuels are very important. Going to renewable fuels is very important. We need to minimize our, reduce our consumption. We need to use conservation, and we need to continue to develop the renewables. That is the path. We're, eventually we'll be in a non-existent industry, but that's going to take decades. People would like to be able to go right to renewables now, but we're not there yet.